Hi everyone, welcome to Forex Trading Empire YouTube channel. In this video, I'll be doing a trade review we took on the US100, also known as NASDAQ. Before I start, make sure to like and subscribe to the YouTube channel. This trade was taken in the Forex Trading Empire 2025 mentorship program, which the link is being linked in the description below. If you're interested to join the Forex Trading Empire 2025 mentorship program, make sure you check out the link. So this trade, the bias was gotten from the 15-minute time frame. So on the 15-minute time frame, we're anticipating lower prices after price traded down, running out this new week opening gap. After a run through the new week opening gap, leaving a fair value gap, we're anticipating lower prices for price to trade to the sell side liquidity. That was our next draw on liquidity. So since we're anticipating lower prices, we're looking to see if we can identify a shift or structure inside the fair value gap. We're anticipating lower prices and price retrace to a fair value gap during the 11 to 12 p.m. model. So we have specific model based on specific time in the mentorship program. So this was an 11 to 12 p.m. model. So during that model, seeing that we're anticipating lower prices, so we're looking for entry on a lower time frame from the 5 minutes down to the 1 minute. Now, going down to the 5 minutes. On the 5 minutes, before we talk about the retracement lower and how we got involved in this retracement lower trading to this sell side liquidity, first we took a trade. We took a buy during the 10 to 11 model. So we have a model based on the 10 to 11 model. So the 10 to 11 model, we're looking for higher prices to see if price could trade to the mid-range of the fair value gap, a 15-minute fair value gap, which is this fair value gap. We're looking for price to respect this 5 minutes structure, the retracement to this 5 minute fair value gap. That's the orange rectangle. We're looking for price to respect it to anticipate higher prices for price to run out the high, leading to the mid-range before this retracement. So price traded halfway to our target before price retrace, traded back and stopped us out. After price stopped us out with this swing low, on 1 minute we saw a clear shift of structure indicating lower prices, and that was where we execute our trade. After identifying a shift in structure after a run on our stop and running out this low, we used the model of the 11 to 12 p.m. model. After the shift in structure, on 1 minute we saw a fair value gap. Executed on the fair value gap, our target was the sell side liquidity, looking for price to run at this sell side liquidity. That was our target, a retracement, a high resistance liquidity run before price traded to our target. Now on the 1 minute, you can see the retracement to the fair value gap. As soon as price retraced to the fair value gap, we'll be waiting for more confirmation before taking any trade. So price traded higher, did a retracement back to the fair value gap, saw a high resistance liquidity run, price was just consolidating. After seeing this impulsive move with a fair value gap, that was where we took a buy. So we took a buy, anticipating price to run at this buy side liquidity. If I'm to zoom more closer, took a buy, anticipating price to run out the buy side liquidity, leading to the mid-range of the 15-minute fair value gap. And you can see how price fade, took our stop loss was placed below the fair value gap. Price traded below the fair value gap, stopped us out. Then we price traded lower, did a retracement, respected this fair value gap, traded lower, took out the swing low. After the run on this swing low, we priced the retracement back to this fair value gap. That was where we executed the sell, using the idea of the 15 minutes, anticipating lower prices. So we took a sell, anticipating lower price for price to trade to the sell side liquidity before the launch hour. So price traded lower, moving back and forth, retraced back to this fair value gap, traded lower, price traded to run out this sell side liquidity. After the run on this sell side liquidity, price did a retracement. Our stop was at this high. We were anticipating price to trade lower to our target. Price came close, did another retracement, creating an equal high liquidity, creating an equal high buy side liquidity. As soon as price traded lower, went close to the sell side liquidity, we closed the trade, because seeing an equal high close to a target, price might retrace and our stop is placed at the equal high. Price might retrace back to go for the buy side liquidity, which is an equal high liquidity. We have seen it happen multiple times where price will go straight to the buy side liquidity before going for a higher time frame swing level, which is in this example is a 15-minute swing low, which is a sell side liquidity. Price came close to the sell side liquidity, did not run out the sell side liquidity. As soon as we saw that price was leading to a retracement, we closed the trade at this candle. Price did a retracement. Price did not trade to the buy side liquidity first. Price traded to a fair value gap, a 1 minute fair value gap, respected the fair value gap, traded lower, took out the sell side liquidity. Now, looking at this trade, we took two trades. The first trade was stopped out. The second trade played out, and there were multiple ways we should have increased our position, but in this demo account, it was only a one trade we took, just to indicate that I actually looked at price before price traded lower to run at the sell side liquidity, because I can connect my own brokerage account to my TradingView account. So I just used the paper trading account. The trade we took was a paper trading account, just to indicate when doing trading videos like this that we actually took the trade when doing trades review. A retracement to the fair value gap, price did a shift or structure lower, creating a high resistance liquidity run, moving back and forth, fair value gap, retracement back to the fair value gap, retrace, traded equal high, traded lower, a retracement before price took out the sell side liquidity. Now, the 2025 mentorship program is going to be starting on the 1st of December. So if you haven't joined the Forex Trading Empire mentorship program, the 2025 mentorship program, the link has been linked in the description below. Now, we are going to be executing trades like this live, where you'll be looking at me calling price, telling you what I'm looking for price to do next, or where I'm anticipating price to draw to next, and you see me execute the trade, telling you that I actually executed a trade on this area, anticipating price to trade lower, showing you how to manage a trade, how to know when to trade stop, how to know when to take partials. All will be taught in the mentorship program. So throughout the month of December, I'll be going through the basics, all the basic parts of the models. We're teaching through the three most important models. We have 5 models we use, but the most important 3 models will be taught during the December, then the rest will be taught throughout next year. But throughout the 12-month period, it's going to be live trading, mostly live trading, to show you how to actually trade live, not using past data, but we're going to be using real live data, not left-hand chart. So we're using the right-hand chart, where you're seeing me executing on live data on what I'm calling out in price. So the link is been linked in the description below if you're interested. Now, just to show a proof that you actually took this trade. So the first trade, you can see the first trade we took. We took a buy, price did a retracement, stopped us out. You can see where we stopped out: a sell, a buy, and a sell. We're stopped out on the first trade. Now the second trade, price did a shift to structure, retracement back to this fair value gap. Took a buy on the fair value gap. You can see the buy. Sorry, took a sell. Took a sell on the fair value gap. You can see the sell, and you can see how price traded lower, and we took targets at the sell side liquidity. You can see where we closed the trade at a buy, a sell, and a buy. If we calculate it by hour, this would be around, let's see, how many hours the trade? That's the 1 to 5 hour. The 1 to 5 hour trade. Very nice trade. So that's all for this video. See you guys in the next video.